There's a new addition to the Bernie Sanders campaign, and he is an expert in banking corruption and finance. Now, this man is William K. Black, and he's an associate professor at the University of Missouri, Kansas City. He is Bernie Sanders' new economic advisor. Now, who is this guy? I'm going to go through some of the things that he is well known for, if you're not familiar with him, and to show you why he's just a great fit for the Sanders campaign. Now, Black was one of the central figures in exposing and prosecuting corruption back in the 1980s and mid-1990s. Now, he's of course famous for exposing the savings and loans crisis, and of course going after some of the people who were causing that, and some of the corrupt figures. Now, the savings and loan crisis, let me give you a little bit of a background on that as well. The savings and loan banking crisis resulted from deregulation of the industry. Now, one of the pieces of legislation that helped deregulate the industry to create the savings and loan crisis was the Depository Institutions Deregulation and Monetary Control Act of 1980. Now, that law was signed into law by President Jimmy Carter, basically allowing credit unions and savings and loans to offer checking deposits and to charge any loan interest rate they chose. Now, I have a checking deposit, or I have a checking account, right, at a credit union. Okay, this law allowed me to be able to do that. However, that last part, where you could charge any interest rate, that's not good. That allowed for predatory interest rates. Well, that's not a good thing. Now, that did not help. That sort of deregulation of the industry of interest rates made it so that they could make some very, very predatory loans. But what added on to that is some later regulation or deregulation by Ronald Reagan. He furthered the act by signing the Garn Street Germain Depository Institutions Act. Now, that allowed property owners to put real estate into trust accounts to avoid future lawsuits or creditors. Both bills, in effect, reduced regulatory oversight, and by the time the crisis was in full swing in 1995, 1,043 out of 3,234 savings and loan associations had failed due to risky and illegal behavior. So that was a pretty big deal back in the mid-90s. So, big problem, right? Now, Black, his role in this was exposing the Keating Five. Now, that's a group of 5 senators involved in doing favors for savings and loans in exchange for political contributions. Illegal bribery. Not good. Now, it's named after the Keating Five. It's named after Charles Keating, who's the chairman of Lincoln Savings and Loan. He was very, very deeply involved with these senators. One of them being Senator John McCain. Black exposed John McCain's role in this. Now, McCain, of course, didn't really get punished all that much. He got reprimanded, but he was, for his part, he was deeply embarrassed to have been caught in this. And since then, surprisingly, John McCain has went on to champion certain forms of campaign finance reform. In fact, he had his name on the McCain-Feingold bill in order to help. So hey, credit where credit is due. He got caught, but then he turned himself around. That's good. I'm a big believer in redemption. Let's just put it that way. Now, according to this article, Black's tenacity in investigating the banking corruption angered Mr. Keating so much that he wrote a memo ordering Black's death. Quote, "Get Black. Kill him dead. If you can't, you ought to retire." Now, does he mean career, or does he mean actually killing him? I'm not so sure. I think he actually meant kill him. Whew, that escalated quickly. But hey, man, these dudes, they're fucking serious. When it comes to money, when it comes to power, they're serious. Now, I remember another guy that went after Wall Street. but somehow ended up getting caught up in a sex scandal. I think it was prostitution. Remember that guy? Right. He was, I believe, Attorney General in New York or something. Eliot Spitzer. That was his name. Yeah. Now, he went after Wall Street. He was very, very tough on them. And suddenly, he's in the middle of a sex scandal. Hey, look. I get it. Guy couldn't keep his dick in his pants, but that's none of my concern. And they just happened to get him away from Wall Street investigations. And that sucks because he was a fighter against political corruption. I don't care what he does on his off time. I don't care. As long as he goes after actual corruption in the government. But unfortunately, his career, it was essentially ruined. So, I wonder if they had anything to do with that. Now, there's more. In 1999, Clinton signed the Gramm-Leach-Bliley Act, which essentially repealed Glass-Steagal. Now, that further deregulated banking in the U.S. Now, I know, it wasn't the sole cause of the financial crisis. However, there are a lot of experts out there that said it may not have contributed directly, but it did make it worse. That's why you need to separate commercial banking and investment banking. You're going to make situations like this worse. And unfortunately, that's exactly what Bill Clinton did. Deregulated the industry, as if we needed to deregulate it even more. Especially after some of the recent, the savings and loan crisis that had just happened because of deregulation. But anyway, on that, in 2009, Black appeared on Bill Moyers' show to discuss the effects of the recession caused by Wall Street and the reckless lending of banking institutions. Now, during that show, he said this: all of those checks and balances report to the CEO. So if the CEO goes bad, all the checks and balances are easily overcome. And the art form is not simply to defeat those internal controls, but to suborn them, or to turn them into your greatest allies. And the bonus programs are exactly how you do that. Now, Black is essentially claiming that banking institutions knowingly made shitty loans in order to profit from them. In 2010, he went before the House Financial Services Committee to testify about the role of Alt-A mortgages, or what he called liar loans, on residential real estate. Those types of loans were one of the major causes of the downfall of Lehman Brothers. He said, Lehman's failure is a story in large part of fraud, and it is fraud that begins at the absolute latest in 2001. And that is with their subprime and liars loan operations. Now, he also wrote a column in Naked Capitalism, where he criticized President Obama and Hillary Clinton, both who actually, he says, have poor records concerning Wall Street regulation. Obama, he said, could not take money from banking felons and then pass meaningful regulations. And he also criticized Clinton's acceptance of Wall Street contributions. Not only that, but he's actually been very, very critical of Dodd-Frank. He wrote, quote, prosecutors he appointed lacked the will, Obama, to use their new statutory powers to require fundamental change. The system remains rigged because those that have the gold, Wall Street, and those that accept their gold make the rules that rig the system, and they commit hundreds of thousands of felonies with impunity for Wall Street elites. Now, looking at this guy's history and what he said, you can't help but say, that's the guy. That's the guy. You want to show how tough your campaign is going to be on Wall Street and how much you actually know. You get this guy on board, and they have. Bill Black is the way to go. Having this guy as Bernie Sanders' economic advisor, oh man. Look, man, if the banks are not nervous, if they're not scared now, well, they will be. Or I should say, if they weren't scared before, now they are. Because remember, Bernie Sanders, he is the one who knocks. He is not the danger. He is not in danger. He is the danger.